despite weakening recovery across major trading partners. The impact of rising crude oil prices on petroleum, oil, and lubricants, that is the POL import bill, has been partly offset by export of petroleum products, which also benefited from better price realizations in the recent months. Optimism on exports of both goods and services and remittances should help contain the current account deficit at sustainable level, which can be financed by normal capital flows. As on 3rd June this year, that is as on 3rd June, India's foreign exchange reserves were of the order of $601.1 billion US dollars, which are further supplemented by a healthy level of net forward assets of the RBI. Now, before I proceed to announcing certain additional measures, let me just say that the situation overall is challenging, but as we have dealt with the difficult situation that we were confronted with during the pandemic, we are committed and determined and resolute in dealing with the current challenge to the Indian economy, most of which are emanating from external factors. So that is a point which I would like to make emphatically. I shall now announce certain additional measures, the details of which are set out in the Statement of Developmental and Regulatory Policies, which form Part B of the MPC statement, and this will be uploaded in the RBI website soon after my statement is over. And the additional measures are important, and they are as follows. The first set of announcements relate to regulatory measures in respect of cooperative banks. Considering the importance of cooperative banks in promoting inclusive growth, 3 measures are being announced for the cooperative banking sector. 1, the limits for individual housing loans being extended by urban cooperative banks and rural cooperative banks, which are basically state cooperative banks and district central cooperative banks, which were last fixed in 2011 and 2009 respectively, are being revised upwards by over 100%, taking into account the increase in house prices. This will facilitate better flow of credit to the housing sector. The second point relating to UCBs, the cooperative banking sector, the second announcement is that in line with the dispensation available to scheduled commercial banks and urban cooperative banks, it is now proposed to permit rural cooperative banks, and they consist of, as I mentioned, state cooperative banks and district central cooperative banks, to extend finance. So we are permitting the rural cooperative banks to extend finance to commercial real estate, that is residential housing. And this will be basically loans for residential housing projects within the existing aggregate housing finance limit of 5% of their total assets. This measure will further augment credit flows from the cooperative banks to the housing sector. The third measure in respect of cooperative banks is that we have decided to permit urban cooperative banks to extend doorstep banking services to their customers. This will enable the urban cooperative banks to meet the needs of their customers, especially the senior citizens and the differently abled. The next announcement relates to margin requirements for non-centrally cleared derivatives. Basically, I am referring to the OTC bilateral derivatives. With the objective of strengthening the resilience of OTC derivative market and in line with the G20 reforms, the Reserve Bank is putting in place margin requirements for non-centrally cleared OTC derivatives. Let me repeat. With the objective of strengthening the resilience of OTC derivative market and in line with the G20 reforms, the Reserve Bank is putting in place margin requirements for non-centrally cleared OTC derivatives. In the first phase, directions on exchange of variation margin for these non-centrally cleared derivatives were issued on 1st of June after consultation with the stakeholders. In the second phase, it is now proposed to mandate the requirements of the exchange rate, In the second phase, it is now proposed to mandate the requirements for exchange of initial margin for such derivatives. To garner feedback from stakeholders on these requirements, draft directions on exchange of initial margin for these derivatives will be issued shortly. The next announcement is important. It relates to e-mandate on cards for recurring payments, enhancement of the limit. The framework for processing of e-mandate based recurring payments was introduced by the Reserve Bank, keeping in mind the benefits of convenience, safety, and security to the users. Under this framework, over 6.25 crore mandates have been registered in favor of large number of domestic and over 3,400 international merchants. To further facilitate recurring payments like subscriptions, insurance premia, education fees of larger value under the framework, the limit is being enhanced from rupees 5,000 to rupees 15,000 per transaction. This will further leverage the benefits available under the framework and augment customer convenience. The next announcement relates to UPI, that is Unified Payment Interface, and their linking of the UPI to RuPay credit cards. UPI has become the most inclusive mode of payment in India with over 26 crore unique users and 5 crore merchants on the platform. The progress of UPI, in fact, in the recent years has been unparalleled, and its overall functioning has been quite exemplary, and now many other countries are engaged with us in adopting similar modes and similar methods in their countries. In May this year alone, about 594 crore transactions amounting to rupees 10.4 lakh crore were processed through the UPI. At present, UPI facilitates transactions by linking savings or current accounts through users' debit cards. It is now proposed to allow linking of credit cards on the UPI platform. To begin with, the RuPay credit cards will be linked to the UPI platform. This will provide additional convenience to the users and enhance the scope of digital payments. And finally, the final announcement relates to review of Payment Infrastructure Development Fund scheme, that is the PIDF scheme. We had launched a fund if you remember, last year to sort of proliferate and to spread the payment infrastructure, the digital payment infrastructure across the country, and this relates to that. The Payment Infrastructure Development Fund, that is the PIDF scheme, was operationalized by the Reserve Bank in January 2021 to incentivize the deployment of payment acceptance infrastructure such as physical point of sale, that is POS machines, mobile POS machines, quick response codes, that is QR codes, in tier 3 to tier 3 centers and in the northeastern states. Beneficiaries of the PM Swanidhi scheme in tier 1 and 2 centers were included in this scheme in August 2021. As at the end of April this year, over 1.18 crore new touch points have been deployed under the scheme against a target of 90 lakh touch points to be deployed over 3 years, that is till end of 2023. In fact, we had kept the targets a bit conservative because in the beginning we did not want to overcommit. But now I am happy to report that in just about 1.5 years, we have exceeded the target which was set for ourselves and for the banks for the next 3 years. So it is therefore proposed to make certain modifications to the PIDF scheme by enhancing the subsidy amount, simplifying the subsidy claim process, and by other steps. This will further accelerate and augment the deployment of payment infrastructure in the targeted geographies. I would now like to conclude my remarks for today. Experience teaches us that preserving price stability is the best guarantee to ensure lasting growth and prosperity. Our actions today will impart further credibility to our medium-term inflation target, which is the central tenet of a flexible inflation targeting framework. India's recovery is proceeding apace, offering us space for an orderly policy shift. While we will continuously assess the evolving situation to tailor our responses, our actions must demonstrate the commitment to keep inflation and inflationary expectations under check. Therefore, monitoring and assessing inflation pressures and balancing risks to growth, I repeat, monitoring and assessing inflation pressures and balancing risks to growth will be crucial for judging the appropriate policy path as we move ahead. The road we have traveled during the recent past has indeed been very arduous, but we gathered faith, focus, and fortitude along the way. Our actions today are in continuation of the several measures that have been taken recently to achieve price stability. Given the elevated uncertainties of the current period, we have remained dynamic and pragmatic rather than being bound by stereotypes and conventions. As the Reserve Bank works tirelessly in its pursuit of maintaining macro-financial stability, I am reminded of what Mahatma Gandhi said long time ago. If we want to overtake the storm that is about to burst, we must make boldest effort to sail full steam ahead. Thank you. Stay safe. Stay well. Namaskar.